A very big thank you to Jess Stanley, CEO of Barclays, and Gillian Tett, Editor-at-Large in the US at the Financial Times, for that fantastic conversation. If you enjoyed that, and frankly, who wouldn't, you'll certainly want to stick with us for our next session, starting right now, on upcoming challenges and opportunities in US-UK transatlantic trade. It's a big, important topic for our network, which is why we brought together the leading US and UK financial institutions, as well as the UK government, to provide their insights. To lead us through this panel, it is my pleasure to introduce Miles Celic, CEO of TheCityUK. Miles, welcome, and over to you.
Tamara, thank you very much for that kind introduction, and thank you everyone for joining us today for what is going to be, I'm sure, an absolutely fascinating discussion building on the interview that we just heard between Gillian and Jess, and dealing with one of the absolutely fundamental questions that the UK faces at the moment, and a major issue as well as we look to the administration that will be coming in the United States in the weeks ahead. And that is, as Tamara says, the upcoming challenges and opportunities in transatlantic US-UK trade. And what a time to have this conversation. The disruption, the challenges, the changes, the profound period of change that the UK and the US have gone through in recent weeks, months, and years, as the UK approaches the end of the Brexit transition period. Questions about the basis on which the UK will trade with Europe, but also progress being made in terms of trade deals with other countries, particularly the exciting trade deal that's been signed with Japan, and what questions that raises about, as a new administration comes in, about the possibility of an FTA with the United States. We've recently had the enormously exciting US presidential and congressional elections. What does that mean as we head into 2021? Excuse me, and as President-elect Biden faces a Congress that is not controlled by the Democrats, much against the expectations of many as we went in, and the global impact, of course, of the COVID-19 pandemic. And the changes that that has wrought, both in terms of technology, of an acceleration of social and economic trends, and underpinning all of this, a period of political change, and in some places political turmoil, demands in terms of diversity and inclusion that not just industry but society needs to address as well. So this panel will examine all of those questions and what they mean for US-UK trade. It will consider how the relationship on trade has changed and will change in the years ahead. It will look at how London will continue to be an international financial centre and a leading centre for financial services and trade. We've already seen in the conversation with Jess the questions around what happens with sustainability, with fintech, and what are the opportunities here for collaboration and cooperation between the US and the UK to shape trade policy and to shape global regulation. And to discuss that, I'm delighted to say we have an absolutely expert, experienced panel to lead us through that. We have Jeremy Amias, the American Vice Chairman of Standard Chartered. Jeremy's been Vice Chair of America's Vice Chair since May last year, was previously CEO at Marex Spectron, and was the youngest ever Managing Director at Solomon Brothers. We have Clare Woodman, the head of EMEA and CEO of Morgan Stanley International. Clare's also a member of the Global Operating and Management Committees and is chair of Morgan Stanley Europe, and indeed also sits on the Leadership Council of my organisation, TheCityUK, and the Board of UK Finance. Delighted to have with us as the UK government representative, Antony Phillipson, who is the UK Consul General in New York, and also Her Majesty's Trade Commissioner for North America. Was previously High Commissioner for Singapore, for the UK and Singapore, and was the Prime Minister's Private Secretary for Foreign Affairs. And also Ailsa King, Chief Client Officer at Marsh, also CEO of the Marsh Risk Management Client Service Team, previously at Willis Towers Watson, and started her career at Sedgwick's. Thank you very much, everyone, for joining us for what I'm sure will be a fascinating discussion. Just a few words of logistics and mechanics. We will have a discussion amongst the panel for about 40 minutes, after which we will open it for questions to the audience. We do encourage everyone in the audience to send through questions. Please do use your Q&A function at the bottom of the screen, and we will do our best to answer those. This session is being recorded and will be made available at request. So thank you very much for joining us today. Thank you very much to the panel. And I'm going to start with an easy question to Antony, which is when you look at the progress of the US-UK FTA in recent weeks and months, and my sense is there has been some really encouraging progress that's been made on that. How do you think that the recent US election will change the atmospherics around that? How do you see the direction of the US-UK relationship evolving in light of recent events?
Thank you very much indeed, Miles, and great to be part of this panel. And thank you very much indeed to BAB for the chance to join it. So I think there's two sets of issues that we're thinking through. One is substance and one is process. On the substance, I think we feel that, as you say, we have made real progress through the 5 rounds of the negotiations since May. We didn't get an agreement concluded before the election, but I think that was because it's a pretty complex set of issues that we're working through between the 1st and 5th biggest economies in the world. But I think in terms of where we pick up now after the election, first of all, of course, Joe Biden and his team haven't taken office yet and won't do so until the 20th of January. So we will continue talking to the existing current administration until they leave office. I think one thing I would really stress is that the negotiating objectives that the US set out, USTR set out in February last year, they reflect the bipartisan past Trade Promotion Authority. So there is bipartisan support for the negotiation in our view. But then that takes you to the process point, which is that there will be an inevitable hiatus while the team changes over. And one thing that we've always been very conscious of is the Trade Promotion Authority timetable. TPA expires in July next year. It can't be extended anymore. If you work back through the scrutiny timetable, you need the administration to notify Congress by early April and then submit a text to Congress by early May. We will want to try and make sure that we are ready to come, racing out of the traps as soon as the administration appoints a new USTR in early next year. We will continue talking not only to the professional staff at USTR as we go forward, but also to people and key players on both sides of the aisle on the Hill, as we always have been, in order to try and set the right context in order to be able to make really swift progress. Final point I would make is lots of people have pointed out, and I think this is, again, I don't disagree with this, that the administration is going to be very focused on domestic recovery, on COVID response. In the campaign literature, they talked about fixing the American economy for the American worker, which has led some people to conclude that they won't want to do an agreement with us. And I think that's too hasty a conclusion to reach. I think we will want to position an FTA between the UK and the US as part of both countries and both governments' ambitions to build back better from the COVID crisis. And that's how we will want to pick it up with the administration as soon as we possibly can in January next year. Thanks very much.
Thanks very much, Antony, for that very thought-provoking question, which then leads me onto my next question to Clare, which is, when institutions like yours, and Morgan Stanley's a terrifically successful company that has huge experience in this space, when you think about the priorities for the financial sector in increased transatlantic cooperation, whether that is within an FTA or not, because I think one of the key things that often gets lost in this is there's so much that happens outside an FTA as well. What would you like to see? What would Morgan Stanley like to see from that?
Yeah. Thank you, and hello, and thank you British American Business and the team there for organising this, very timely, and really glad to be part of this panel discussion. So look, firstly, I think I should just underscore, it's reassuring to hear Antony's comments because there have been concerns expressed about would a future administration have time to focus on a more international agenda? And that's reassuring to hear Antony's perspective, which I agree with. And firstly, I'd just like to say, for financial services firms that have operated cross-border, I think the key thing that is a catalyst and really important is regulatory cooperation. And I would say that our experience is that currently it works pretty well, and that's largely as a result of the extensive regulatory reform agenda that we have all lived through in the last decade. So things are working well. I think in terms of priorities as we look forward, continuing the theme that we heard in the last panel discussion, there are a few things. Green finance has to be, a top priority. I think an agenda that supports growth and innovation to let fintech flourish in both the US and the UK. Secondly, thirdly, running a financial institution, it would be remiss of me not to give a nod to operational resilience, which is hugely important and a top priority for all of us. And lastly, it's really important data sharing and data transfer. Just going back to green finance, financial markets play a key role in the allocation of capital, and having an agenda around us that supports, more direction towards greener and companies transitioning to a greener economy is really important. And there has been real progress on the taxonomies and the sort of the structures and the frameworks that are required to enable comparability amongst different companies. That's important, and I think it is very positive to see that the Federal Reserve recently applied to join this group of central banks known as the, I'll probably get this wrong, but the NCBGFS, which is basically the network of central banks and supervisors for greening the financial system. I think that's a really positive sign of the direction of travel in the US, and I think the UK can play a key role. On fintech, not much has been heard recently about the financial innovation partnership between the UK and the US government. Miles, I know you were involved in a lot of that. There are meetings coming up in the summer, and let's hope that there's something that's built on in between to really promote an agenda that both fintechs that are growing here in the UK, but also in the US, can both leverage different skill sets to support the economy. So really super there. Operational resilience is really just a quick one. We need consistent regimes that help, financial institutions, but also the infrastructure providers that help financial markets remain really vibrant and liquid. We need those to have consistent and comparable regimes. And of course, we all operate in global firms that need to be able to transfer, markets need to be able to transfer information and data in a safe and controlled manner, but we need to freely enable that because AI requires very large data sets and data pools. So that would be my wish list. I think I'm very optimistic on the green finance agenda. It's it was a big discussion point with Gillian in the last session. So that's my pitch.
I hope if we get even half of that, I think that would be terrific progress. And I think it's fascinating the point you raise on sustainability, because certainly in recent conversations I've been having in the US, and hopefully we'll see this with the Biden administration, that really does seem to be rising up the agenda in a really encouraging way. From something that is encouraging to perhaps something that, depending on your point of view, might not be as encouraging. Jeremy, Brexit. So it's not taken us long to get to it. When you think about the implications of the UK's exit on financial stability, on cross-border financial regulation, how do you see that playing out with the US, both from an industry and a regulatory perspective, but also obviously that we have a different administration that will take a different perspective now?
Right. Yeah, there's lots of new moving parts. Again, as everyone else, many thanks for inviting me to this great august panel, and it's a real pleasure to be part of the team today. I think Brexit does provide quite a lot of challenges, but also some opportunities in the financial sector. On the corporate side, I have to say it's maybe less of an area of focus for this panel. I think we shouldn't underestimate the challenges for free trade, and also making sure that it becomes a priority, because as we've seen, the UK and the EU still haven't got their ducks in a row. And I think it will be challenging for the UK to be a destination for corporates, for manufacturing, for those kind of things. And even now we see, for example, corporate treasury centers for most American companies are in Brussels or Dublin or Luxembourg. They haven't traditionally been in the UK. So I think that is a challenge that shouldn't be underestimated, but maybe it's an opportunity. When it comes to mainstream financial services, following on from some of Claire's comments, I think there's quite a big opportunity here. And that's mainly because in financial services, I think there's no doubt globally that sort of the Anglo-American background has driven the formation of this market through history. And I think also the European financial sector knows that and appreciates that, even though some of our European friends might be glad to see us go. I don't think that's true in our industry. I think they are nervous about that because the sort of I don't know if it's the common law approach as opposed to the more prescriptive Napoleonic approach, much more of a can-do attitude of regulation, which I think will be missed in Europe. And that is an opportunity for the US and the UK to kind of get together, looking at the best strengths they have. I don't think you're going to see an immediate London breaking out of the shackles of EU regulation, in as much as most of it is prudential regulation, which is similar, but there may be some modest examples we can think of in the last few years. For example, there were restrictions on European firms' bonus payments, for example, which has created an issue for a European firm like ours in the US. It could create an issue. Or a few years ago, when margin reform was instigated, there were different tracks for the US and the UK. It made us, for a brief period, as a UK bank operating in America, very uncompetitive in certain corners of the swap market. Those sort of things, of course, would go, they're kind of at the edges. I don't think you'll see a huge change. I also think that European regulators have not really grasped this. I mean, at this point, I think that, I lived for many years in Hong Kong. If this opportunity was presented to Hong Kong or Singapore, they would have been phoning everyone, taking them around to their houses, explaining why they should set up there. I haven't seen that from Frankfurt or Paris or Dublin so much. So I think that's, they could have probably done more to grasp it. And I think also, you see, for example, right now there are cross-border licenses, bilateral cross-border licenses, which European countries can set up to deal directly with London. That is because they kind of want to, right? So I think London has a lot of strength that is clear, and London is still the center of liquidity. It's still the center of trading for all these things. So I would say that the US and UK are able to grasp this if they want to. And I think London also is a very compelling place where European headquarters people want to live. That's just a fact. It's a much more expat-friendly environment. So for these reasons, there's still an opportunity, but it needs to be grasped. I think I'd say finally that if you look in the financial services business more widely, the largest global accountancy firms, asset management firms, private equity shops, and most banks are Anglo-American. So that's an opportunity.
I'm reminded when you talk about the British can-do attitude, I'm reminded of a meeting we had with a senior EU official soon after the Brexit vote. We were sort of running through how to get around a lot of these problems, and he sat there politely. And at the end of it, he said, this is what I'm going to miss about you Brits. It's your pragmatic, practical approach. Of course, none of it will ever work because you start off with this empiricist view of what's practical. And in Europe, we start with the Code Napoleon view, which he then summarized as saying that it might work in practice, but does it work in theory? So we'll see whether or not that plays out in the years ahead. Ailsa, turning to insurance, having come to my previous role from 7 years working at Prudential, insurance is always different, we always used to say. What's your sense of the way that a US-UK FTA could impact the insurance industry?
Thank you, Miles, and thank you again for inviting me to join this great panel. And yes, I would, Jeremy, add insurance to your list of important industries for the UK. So look, ultimately a free trade agreement is going to enable more commerce between our countries. It's going to be good for clients and the economy, and that includes insurance and reinsurance. And here at Marsh & McLennan, our view of the FTA negotiations, and one, by the way, which is widely shared by other insurance brokers, insurance carriers, and our trade associations, is that the current transatlantic arrangements work really well and should continue, we hope, in the same way they are at the moment. If it ain't broke, don't fix it, is our view. And Claire talked about the need for the US and UK administrations to really address international priorities. And in this industry, it's key too, because the US and Canada represent the largest source of insurance business into the London market, and certainly the largest source of brokered premiums that Marsh handled here in the UK. And London's playing a really important role at the moment in stepping up with insurance capacity and solutions that we work on with our clients at a time of increasing need. And London's always played an important role. We've historically had a large number of long-term US users of the London market, but this has been a challenging year, Miles, and we've seen many more relationships established, and existing clients are using more services in London and the insurance market more extensively. Insurance capacity this year is shrinking globally, and London is playing an even more critical role in providing that much needed capacity, not only to US clients, but to global clients. Particularly, I'd single out in the property and financial lines of insurers, including protecting directors and officers in respect of their liabilities. So many US clients have got really complex needs in insurance, and we believe that these are really well suited and will continue to be well suited to the London market. Our clients have global footprints and they require global solutions, and that means ease of trade is critical. I think there are some mixed views in terms of the ability to negotiate with the UK without knowing what our final UK-EU relationship will bottom out at. But then again, you know, as I said, this is in our sector anyway, it's been a playing field where it's worked well. Until now, at least. We know that without equivalence, after transition in Europe, the UK won't be able to use financing passporting though. And even if we did have positive determinations, the EU could revoke those equivalents at any time, and that could certainly be disruptive. So continued trade in financial services and insurance may require firms in the UK and EU to restructure their operations. And of course, we're seeing financial institutions shifting their jobs and assets from London to EU cities in some cases. And brokers like ourselves at Marsh have established UK branches of EEA-based entities so that we can ensure seamless service and access to markets in a post-Brexit world. So we're optimistic. But clearly more clarity in regulation is always welcome.
Brilliant. Thank you very much for that, Ailsa. The questions are coming in thick and fast. So can I urge members of the audience to keep those coming? Some really interesting ones in there. So please do use the Q&A function at the bottom of your screen. Before we turn to those, I'm going to put a question to the whole panel. Antony's set out, I think, a very compelling view of where we may end up with an FTA, even with the change in administration. But if it is the situation that we don't end up with a fully comprehensive FTA in the near term, how can the US and the UK work together to lay down foundations for greater cooperation between the US and the UK in financial services and financial markets? Including potentially internationally. Antony, would you like to kick us off?
Thanks very much. I mean, I think the way I've always felt about this, I mean, the FTA, as I say, is a top priority for the British government and indeed for the US government, and we've been preparing for it for a long time, and then, as I say, negotiating hard since May. And we, you know, I'm really optimistic that we can keep making progress on it. I mean, just picking up on a couple of the comments that have come in, because I think they're relevant in this. I mean, and this is sort of slightly thinking aloud in front of you all, if I may. I mean, people say, could we do it without TPA? The answer is, in theory, yes, you can. The US has negotiated without TPA. But I think the reason I mentioned that, coming back to your question, is let's focus on the end rather than just the means. The end is a deeper, stronger economic partnership between the UK and the US, whether in financial services or life sciences or advanced manufacturing, et cetera, et cetera. And the FTA is one of the ways we've done it, been working through towards that end. The other one, I think it was Clare mentioned, the Financial Services Regulatory Working Group and the Financial Innovation Partnership. I think that is really important, and I don't see any reason why that shouldn't continue. And indeed, I think we actually need to sort of give it a bit more prominence. And the really important thing about that, as you of course know, Miles, firsthand, is it's infused by the business view. And all of this needs to reflect what business feels are the opportunities for future collaboration, both transatlantic and globally. There's a comment in one of the Q&A talking about the signature of the Regional Comprehensive Economic Partnership in the last few days. You have that, you have CPTPP. This is a very complex world that we're now in, and that's before we get to the impact of COVID. So, you know, through the middle of that, we need to have a sense of where are we going to find future economic opportunity, and how do the UK and US in particular, I would suggest for this audience, but also because I believe this, how do we work together bilaterally, but also collaboratively through the G7, which we will chair next year, through the COP process and all the issues around climate finance, which we might come back to in a minute. Because I think we are two of the most innovative economies in the world. We are focused on using tech to create, as I say, future economic opportunity. And the key question for me is, what are the future rules of the game? Where are they going to get written? And who's going to write them? I'm not sure the answer to that is the WTO. It may be that it's some form of a mix between the G7, the G20, the OECD, the IMF. It may be some of the more informal groups around the Financial Stability Board or Basel 2, 3, or whatever we're up to at the minute. And then informal discussions like this and at Davos and elsewhere. And it's all focused, as I say, on that sense of what is the end we're reaching for, which is the UK and US taking this extraordinary economic relationship that we have now and building it for future jobs, growth and prosperity for the citizens of both countries. And I think that's hugely, not only important, but also really quite exciting. And we want to do that together with business and go out there and make it happen.
I think that sounds like a really, really compelling view. Claire.
Well, look, I would say, you know, for regulated financial services firms, it's all about, you know, good integrated markets. You know, fragmentation adds cost, complexity. We don't like any of that. So anything in terms of cooperation that can ensure that we've got seamless, well-connected, you know, global markets, because most of the business we do, most of the financing, the funding, the hedging, the liquidity that Jeremy referred to, it's all very global and it remains global. And, you know, barriers in terms of quotas and, you know, trade restrictions, that they're not the things. It's about what Antony referred to, cooperation. And I think, you know, continuity around, you know, regulatory, central bank, treasury departments, maintaining that cooperation, I think is really helpful and really key. You know, if there was an FTA, financial services was part of it, I think it gives a good, it's symbolic in that it signals greater intent of cooperation. But if not, we just need to maintain this consistent, you know, cooperation that we have enjoyed. And yeah, that's
Great. Thanks, Claire. Jeremy.
Yeah, I mean, I following up from what Claire said, I have very similar views. I think if you get too bogged down in an FTA, and I pity Antony, his job, in a sense, you can get really away from financial services. You know, I read obviously things like agricultural is a very kind of contentious issue on both sides. These are very complicated issues, as has been seen between the UK and the EU. I mean, it's about fish. So the bigger FTA, which is a laudable project, doesn't bog down the great cooperation which can continue in financial services, because that's a natural for us, right? The strength between the US and the UK in financial services is already the best sort of bilateral corridor of that industry globally by miles, including insurance, Ailsa. You're absolutely right, including all these big industries. So that's what should happen, and we shouldn't get bogged down by the FTA at all. And I think you see that and therefore they work very well. You know, there's in the academic world, in the cross-border, in FDI, they are bilaterally the strongest relationship. So I'm pretty bullish about it, and I just hope that in some ways it doesn't, the longer term negotiation of a wider FTA doesn't bog down or impede the natural connection in financial services.
Jeremy, thank you very much for that. I think I was losing you a little bit there. Was that just me, or were others having the same experience? Yeah, I think it might be an issue of proximity to the microphone, Jeremy, for your next answers.
Okay, thank you.
Thank you. Ailsa.
Yes, thank you. I mean, I agree with Claire and Jeremy's comments on regulatory cooperation and the importance in our trading relationship. I thought maybe I'd single out a couple of example factors that we'd like to see. The first one is around talent mobility. Our industry, and I would say all financial services, really rely on its global talent and the mobility of that talent. So in order to facilitate that continuing factor and that close working relationship, we'd like to see the British and the American governments seek some uncapped reciprocal visa liberalizations for non-immigrant professionals to live and work between the two countries when we can move out of lockdown, of course. So that's one factor which we think is really important. And another might be tax, actually. We know that tax policy is not part of the UK-US trade talks at this stage, but we do think consistent tax policies, perhaps the OECD minimum tax structure, are important for sustained economic growth. And we think that the trade negotiators should be aware of the impact of disparate tax policies and how that impacts the way we trade, and really the recognition of what that means in terms of obligations for our clients on both sides of the Atlantic. And Marsh and McLennan are sharing our views with the national tax policymakers, the OECD, and business groups like BAB, because we think it's such an important factor. So I just add those two examples of where we'd like to see that regulatory cooperation really make a difference.
Great, thank you. Before we turn to the audience questions, which really are coming in thick and fast, just one final question from me on sustainability, and I'll take this one in reverse order just to sort of spruce things up a bit. We've already talked about green finance and sustainability and the role that the regulatory systems and the agreement between the UK and the US could play in that. We've already talked about COP26, the role of the G7, and how the aim is to use that to highlight the role the private sector can play in fighting climate change. Clearly a priority for the Prime Minister and for the President-elect. How much scope do the panelists see? Do you see in the US and the UK working more closely together now in the years ahead on climate change? And in particular, what's the role for the industry in this? Ailsa, would you like to kick us off?
Yeah, I mentioned earlier the importance of the London insurance market to US organisations mitigating their risks through the insurance market here in London. And one of the key areas where we support clients is catastrophe, protecting against catastrophe losses that we see particularly in the Americas. And it's worth pointing out that climate change is now impacting the nature of those losses that we see in the industries, wildfires being an obvious new example. So the sector must continue to work with government agencies, both in the UK and the US, to better understand how those risks are evolving and help our clients by better modelling, managing and mitigating these new levels of frankly climate-related losses as they change the marketplace. And there's another example where we're seeing change, and that's with the US hurricanes that again largely insured through the London market. We're seeing a really sharp increase in the post 200-day loss amounts that are being paid out by the market. And that's from the time that these events hit landfall to that 200-day then start point. And we're seeing costs then rise after those 200 days have expired. And we see that reflecting really a movement in social inflation, a number of factors there playing their part, and the impact of political influence. So it's really a very important issue where the insurance and risk advisory industry can play an important part. It looks like the US are going to have a more flexible position on climate change actions. It looks likely that the US will seek to rejoin the Paris Agreement and that should open up further collaboration and support for climate initiatives. And so I guess in summary, the insurance industry will continue to do what it's always done in really promoting security, additional security around climate change initiatives, and support our clients' risk management strategies alongside advising them on their regulatory obligations. So the impact, we think, of greener policies from the US could be that global insurers, by the way, will also face widespread pressure to stop insuring and investing in environmentally harmful projects. And Biden, we note, has also said his administration may ban permits for oil and gas production on federal lands, which together with other environmental policies could have implications for the insurance industry again, and the regulatory risks that certain industries we serve face. So lots of change and lots of roles I think the insurance and reinsurance industry can support clients and advise governments on.
Thank you very much, Ailsa. Jeremy.
Yeah, can you hear me okay now?
Yeah.
So it's an interesting topic living in the States here during this election. There's been a lot of divisive topics here, but I don't get the feeling that green ESG is on the highest point on the agenda of the man in the street, actually, like it might be in Europe. Terrible wildfires and all kinds of climactic issues over the last few months. But obviously Biden has said it's going to become more of a priority, which I think is really is also related to I think after the tunnel. BlackRock, which is the largest institutional investor in the world, has made a very big statement about this area, and I think the largest asset managers now are very keen to prioritize ESG, and most of them, the largest ones, are US based. So I think as a matter of fact, that side of things will push this very high on the agenda to a more receptive government with Biden. And I'm also sure from US so I think high on slightly more natural, but as I say, I think what will drive it is the investor side here, which could be very significant.
Thanks, Jeremy. Again, a few problems with the mic there, but I think we got the main gist of that. So thank you for persevering. Claire.
Yeah, thank you. Look, there's no question that, ESG is, the defining theme for the investment world over the next decade, that's for sure. I think there are certain areas where, further cooperation could be really beneficial to both of our economies and society. We have the COP26 next year, and I think on the US side, maybe we'll see, some sort of symbolic green bond issuance, perhaps. I think a focus on, some of the work on disclosures and just alignment and thinking about what are the outcomes we want to achieve without getting too bogged down in legalese. But I think disclosures are important. And then I think, an emphasis on really encouraging all financial institutions, to play a real role in the transition. And Ailsa talked a little bit about this, which is it, and it's concerning, but it's really important that, companies and financial institutions and insurers are able to help companies in the gradual transition to a low carbon economy. These things just cannot happen overnight. And, it was good to hear that, Morgan Stanley, like Barclays, we have, committed to net zero financial emissions by 2050. And in 2018, we committed to mobilize over $250 billion of capital to support low carbon solutions by 2050. And I will say 2 years in, we're over $80 billion of sponsoring clean and renewable transactions. So there is huge momentum here. And I think that there are areas here where, the new administration incoming in January can really nudge the whole ecosystem to help, the economy and corporates get there for sure.
Great, thanks very much for that, Claire. Antony.
Thank you. I mean, I completely endorse everything that the others have said. I mean, and this is an enormous topic, but maybe just to sort of pull out a couple of highlights. I think next year, I mean, obviously we should actually be sitting in Glasgow now at COP26, but slipped by a year because of COVID, of course. But in a way, we certainly haven't taken our foot off the pedal, and huge amount of work going in with partners preparing it. And that would have been happening here in the US, whatever had happened in the election, because of the amount that we need to do with subnational actors and indeed with the private sector, not least sitting here in New York. There was a really, I thought, really important event last week, actually, that the City of London put on, called the Green Horizon Summit, at which the Chancellor announced some of the things that we'll be doing, like mandatory climate disclosures by large companies and institutions by 2025, sovereign green bond will be issued next year, green industrial 10-point plan that, again, will pick up on the themes around COVID recovery and make sure that that is done in a sustainable and green way. But you know, there's a rather sort of flip phrase that we use here, which I think it actually captures quite a lot of this. It's all about financing the green and greening the finance. And we need to do both. And the partnership, I think, that we will deliver and develop between not only London and New York, but also Edinburgh and New York. I mean, people often forget the second biggest financial services centre in Europe is actually in Edinburgh. It's not on the continent. So, you know, huge role for the financial services sectors to play there. In terms of my one final thought, I mean, I think the politics here is really interesting. There's huge amounts going on at state level. Individual states like New York committing themselves to net zero, the Governor's Climate Alliance that represents basically 60% of US economic activity committed to net zero by 2050, the focus in California around the race to zero in terms of low emission vehicles, but also, you know, just at the headline, so the Federal Reserve Chair coming out and calling climate a stability risk. You know, I think all the trends are going in the same direction. I think there is a sense that this is an issue that we are behind the curve in addressing. We are not keeping up with our Paris commitments. But we have a chance now over the next 12 months as we sort of move towards COP to really sort of bring these points back together, including now with a US administration that has said it will rejoin Paris on day one. And I think that is hugely important. Massive, massive agenda, but again, can only be done public sector, private sector, and indeed academia all working together towards a single end.
Great, thanks very much for that, Antony. I'm going to move to some of the questions that are coming in from the audience, and there are some absolutely terrific ones coming in, some of which we've already covered in the course of what's already been a very rich discussion. But one of the ones I'm really keen to pick up, and it's unfortunate the person who sent it in has done it as an anonymous attendee, because I think it's a great question. FTAs are unfortunately replete with examples of situations where countries have signed very exciting new FTAs. They've created new spaces, new opportunities, and it's the execution of the FTA, it's the adoption where the FTA falls down. So often larger companies are able to take advantage of this, but it is smaller companies that don't. And the question is, do we have any thoughts? Does the panel have any thoughts on how a future trade deal can be used to support more SME exporting and investing across the Atlantic? Antony, would you be happy to kick us off on that? And then we'll see if anybody else wants to come in.
Thank you. As you say, hugely important question. And I think there's two halves of it. First of all, is making sure that the FTA itself is actually negotiated along lines and towards objectives that will genuinely help SMEs. And so one thing that we did from the summer of 2017 with the US, some may know about, we had something called the Trade and Investment Working Group that was preparing the ground or preparing us to be able to move quickly into the FTA once we were able to. And alongside that, including in partnership with BAB, amongst others, we ran a series of what we called SME dialogues between the UK and the US, focusing on how to illustrate the opportunities for doing business in each other's country. We did one session, I think, on intellectual property. And I think that was really important, both in terms of getting the inputs right for the FTA. The FTA itself, I think, will address issues, some obvious issues that I think will really benefit SMEs, including tariff issues, customs procedures that may not be big issues for big companies who can cover the cost of doing that or even absorb the cost of residual tariffs. But for SMEs, it's the difference between profit and non-viability. There will, I'm pretty sure, be an SME chapter that will bring some of those issues together, but really, again, put the importance of getting this right for SMEs up in lights. And then the crucial thing, as you say, or as the questioner sort of rather led the witness, i.e. me, making sure that we then focus on implementing and actually making sure that people take the opportunities that these FTAs bring. And that's not just the UK-US one. I think we will want to make sure we're doing that in the UK-Japan piece, If we get an agreement with the EU, again, there'll be a big push to make sure that that sort of is implemented properly for SMEs. But I think it's hugely important. SMEs are the lifeblood of our economy. They're the hearts of our communities and societies. And even big MNCs started as an SME at one point. So we need to get it right for them.
Great. Would anyone else want to come in on that? I think sense that that Antony's covered the ground pretty well on that. So moving on to a sort of related question in many ways, particularly the point, Antony, you raised about how MNCs start off as SMEs. A question that's come in, what explains the continued success of UK-US fintech investment in the absence of an FTA? So there's no FTA between, as we all know, between the US and the EU. And yet, despite that, the flows between the UK and the US on fintech investment have been very healthy and very encouraging. And as the question sets out, possibly something to build on. Claire, would you like maybe just to kick us off on that one?
Yeah, although I might take my answer in a slightly different direction. Actually, absolutely there are investment flows. I mean, one of the things that I think has challenged fintech in the UK is that that small businesses get to a certain size and then it's not scalable for them to stay in the UK, and they've had to leverage and try and access either sponsor support, a strategic buyer, or investments, and seek to list. And one of the things that I was very pleased to see in the Chancellor's recent announcements was a review of all of the listing regime and the listing rules, etc., and the commitments in his statements on green finance to find ways to really support the fintech industry here in the UK. And I think with having comparable and consistent listing regimes between the US and the UK, I think that would be really encouraging, because it just maximizes and makes the pie bigger. So actually, I think there has been success, but there is a way that we can help grow these, and it does actually benefit not just the UK to enable them to stay here and get bigger, but actually both, because there's innovations in healthcare, which is hugely dependent on tech, as we have just seen, and look at what's going on with vaccine research and production, etc., but also with AI, with cyber, with tools that help make financial services safer and more secure. So I'd like to see a way that both can benefit.
Great, thank you. Jeremy.
Yeah, hoping you can hear me okay.
Yeah.
I mean, I think the US is a takeout for actual global fintech. It's not just for the UK. I mean, if you look at countries like Israel, let's say, which has a very vibrant fintech, as soon as their companies get beyond a certain time, they all end up listing on NASDAQ or sending over to Silicon Valley. So that's probably true everywhere. But the US and the UK have such a natural affinity, and so many of the industries that these fintechs will support, financial services, pharma, are natural Anglo-US businesses. So that's why I think that is naturally strong. And I think, and the legal systems are very similar. So that's naturally strong, and I think it will continue. But that could be a very, very good way for further growth in the relationship. Yes.
Great, thank you. Antony, Ailsa, anything you want to contribute on this one? Ailsa?
No, I think I'd just add that, yes, it's a very healthy example of what works well in the UK. And I think, though, related to the fintech phenomenon is the ecosystem around it. And I do think that in the UK, we've got a very supportive, I take on board Claire's points about listing, but actually we do have a financial services sector, including insurance, that's very supportive of startups and as they grow and evolve. So I would say it's a success story, and it's a great example of how the alliance works well. But I have nothing else to add in terms of specifics. Thanks.
Antony, anything from you on this one?
Just one very quick one. I think it's part of the ecosystem that Ailsa mentioned, which is the fintech regulatory sandbox. I think has been a really important part of this in terms of looking for innovative ways to manage the balance between regulation and innovation. People criticize us for over-regulating and crushing innovation. I think in the fintech space, we have got it right, and I think it's shown real benefits. And I think that's important because we need to think about how we take that approach into other areas, including things like AI, etc. Because I think those again are going to be really important drivers of prosperity, jobs, growth for the UK economy. And then going back to the question as well, I mean, people ask it how we've been successful despite Brexit, oversimplification. I think it's a reflection of the fact that the UK needs to position itself as a global centre for this activity. It's not just about being part of the EU. We need to make sure we have right links with the EU, with the US, with Asia, Latin America, Africa, and that's what we need to focus on for the years and decades ahead. Thanks.
Great, thank you for that. In light of the time, what I'm going to do is I'm going to take two final questions, I think one of which is very much in Antony's purview, and then ask everyone just to offer a few closing thoughts for 30 seconds each. But the two questions are, and building on what we've been talking about, particularly on the sustainability piece, is how much of the change that we are going to see in the years ahead on green finance and green sustainability is going to be led by governments, and how much is going to be led by market and by customers. And indeed, I would add to that question, by employees who are expecting more and more from the companies they work for. And I suspect a question much more in your area, Antony, on tax, which has already come up a number of times. Where are we on the UK-US position on the UK's digital services tax? A question from Andre Kazaki that's come up. So perhaps that one, and then we'll open it up to the market versus government balance. Antony, over to you.
Thanks. I mean, it might be a frustratingly brief answer. I mean, our priority remains, as it has been for a while. We think the issue of digital services taxation needs to be addressed. We don't think that the current sort of structures are fit for purpose, and that is driving real concern. I think that companies are extracting real value from UK consumers and not paying a fair share of taxation. Our priority is to address this in the OECD. That is what we've been working for over the last few years. It's only because of a frustration that we haven't been able to make as much progress as we wanted to in the OECD that we, and indeed other economic jurisdictions, have moved ahead with unilateral digital services taxes. So that's what we have done. We still want to fix this in the OECD, and that I think will be one of the things we want to pick up really quickly with the next US administration as soon as we can in January. Thanks.
And on the question regarding how much, in your sense, do you want to sort of offer some thoughts on how much of this will be driven, how much the change on green and sustainability will be driven between governments, between the market, between customers, between employees?
So again, I think it's a hugely important issue, and I think the answer has to be collaboration and discussion between. I mean, governments, we're the ones who set policies, we're the ones who regulate, and we've been doing this quite aggressively in the climate space over the last 20 years, I'd suggest, through carbon budgets and the like. But I think if we don't do it in a way that goes with the grain of innovation and companies looking for efficiency, because I think that's a big part of the green agenda. I mean, there is economic opportunity in the green agenda, both in terms of operating more efficiently and more effectively, but also those who are generating the green goods and services that are going to take us forward. So I think we need to get that balance right, and that's why we don't talk so much about it these days. But the industrial strategy that the government worked up over the previous few years, absolutely at the heart of it was that partnership between the public sector, private sector, and academia. Clean growth was one of the 4 grand challenges. I think that remains a fundamentally important sort of framing. And then I think that point about the fact that employees are also consumers with their own set of expectations. I think especially as we look to sort of the younger generations who are very differently motivated, including in terms of their engagement with the political system, they will demand that we get this right. And frankly, it's their generation that will pay the cost if we don't. Thanks.
Thank you for that. Claire, Ailsa, Jeremy, anything you want to come in on that one? Jeremy.
I mean, just quickly on the same. So I think it's going to be more driven by the market. I think the government enables it, and Europe, as we've discussed, has put together a pretty detailed document about what it expects from financial services vis-a-vis ESG. But at the end of the day, Morgan Stanley or Barclays' decision, or we made a decision at Standard Chartered several years ago not to fund solely coal-fired power in the emerging market. Those weren't arm twists by any government. I mean, they were just decisions we made because our stakeholders and our shareholders and our employees asked for it. And I think the real push will come from stakeholders and investors and asset managers, and that's what I think will end up being what makes this gets us over the line.
Thanks, Jeremy. Claire, Ailsa, anything to add on those? Claire.
From my side, oh, sorry, Ailsa. From my side, I was going to make similar points to Jeremy, and I think that you will see that the ESG is a huge arc. I think that the focus on social is coming from societal, employee, shareholder pressure, and you'll see significant progress on the social justice agenda, and that's coming from our own people and the own societies and communities that we operate in, not because it's mandated by a regulator or law.
Thanks. Ailsa?
And I would just add to that, Miles, that we're in this fulcrum, aren't we? This extraordinary time we're living through, and talk of a green recovery is both at government level and, of course, in the corporate world. And I think international bodies like the UN and the TCFD are really ramping up talks on climate risk and the opportunity now to change our thinking and build back better, as the saying goes. And I think the ESG thinking now being embedded into companies' strategies, and we've heard some examples here of our companies that are doing exactly that, really will then be the proof of the pudding, the operational execution that our governments want us and in encouraging us. But as Clare and Antony quite rightly say, I think it's the young talent as well that our organisations represent and in society that will demand action. So I think building back better and greener is now the focus for all of us as we come through this economic downturn and emerge from in a post-COVID world. So it's an extraordinary opportunity, I think, ahead of us.
Thanks. I'm conscious we've got about 2 minutes left, so I'm going to ask the panel each to come up in one sentence the thing they're most excited about in terms of the possible opportunities between the US and the UK, and the thing they think is the biggest risk. Antony, I'll give you first dibs on that.
That's a really challenging one. So I think, the thing I'm most optimistic about, I think, is the sense of British and US investment in innovation. I think we've seen it over the previous 20 years. I see no reason we won't see it over the next 20 years, and it will drive the answer to all the issues we've been talking about. I think the issue that I worry most about, in a sense, is we have relied quite heavily on people's acquiescence in a direction of travel in terms of globalization that I think has really fragmented over the last 5 years for lots and lots of reasons. It'll take a long time to talk about them all. And I think we need to get back to recreating a sense of public confidence in trade liberalisation. And that, again, needs to be a transparent discussion. We need to illustrate the benefits, but really, we do it with the acquiescence of voters. And I think we need to get back to winning that argument. Thanks.
Great. Thanks, Antony. Ailsa, one sentence each on thing you're most excited about, thing that you're most concerned about.
Okay, I think the most important thing, building on what Antony was saying, is the drive for innovation. And in risk and insurance world, I see that examples in, say, cyber solutions, which are going to be so important, not only to fintech, but to many, many clients' worlds. And that capital investment in protecting and mitigating against risk, I think, is going to help clients and organisations on both sides of the Atlantic plan longer and better for the future. And the thing that worries me most, more protectionism and more regulatory red tape to have to
navigate. I think I'm picking up a theme. Jeremy?
I would say focus on the things that both countries are really good at: financial services, pharma, fintech, innovation. Do not get bogged down in the edges of an FTA that could take years and years to negotiate.
Great, thanks very much. And Clare, last word with you.
Well, I just think it's great. We've all talked about outcomes and purpose, and I think we just need to stay focused on those, be realistic, and as Jeremy said, quick wins.
Great, thank you very much. I think all that remains is for me to thank our panel on behalf of all the attendees, for me to thank the attendees for their terrific questions, and to thank the team at BAB who've done such a fantastic job getting all of this together. And with that, Duncan, over to you. Thanks very much indeed, everyone.